Good morning. It is Wednesday and the market has not opened. It'll open about 20 minutes from now. And we've got a big day in store. We've got NVIDIA announcing earnings later today. That should be big, big news. We're going to do a watch party if you're interested. Join us at 4 p.m. Eastern, and we will do a watch party. It'll be fun and it'll be interesting because we're going to analyze the earnings as they drop and look at the charts and so forth. With me is Daryl. Good morning, Daryl. How are you?
Good morning, Victor. Good to see you.
Yeah, it's great to be here. Got started a little late, and but here we are. Looks like Mike, the dividend investor guy, is up. Good morning, Mike. I hope you're doing well. And yesterday we had a couple of earnings that were neat. We went over them on the live stream last night. Um, wonder if the let's see here. I think it was MongoDB. They were up 30%. Looks like they're still up. Pretty incredible, and they caused a little bit of a rally outside of their own stock. Other small software companies were rallying last night to some extent, and looks like their earnings were really good. Their revenue grew nicely in the quarter, 23.7%, which was good. I think they're still overpriced, but it was a really good earnings, really good growth. If software companies keep growing like they showed, because both MongoDB and Okta announced last night, and they both had very good earnings. I think the software space may go places. We'll see. Free cash flows have really grown. See how it's doubled just in the trailing 12 months. It's doubled. So overall, Mongo had a very, very good earnings, up 30%. Wow. Incredible. Over the 1 year, this stock needed the boost because it's down 13% over the 1 year. And the year to date, down 8%. So today it'll be in the green. It'll be in the green very quickly. Price target analysts are 41% discount is what they think the stock offers. And when I have when I look at my valuation, I updated it. I still think, well, as we speak, before the stock opens, it's priced 21% too high. So once they jump up 30%, it's going to be too expensive. But MongoDB is having a good night. And hopefully it's a sign for software stocks, because I think software stocks have been unappreciated. I think the data center stocks have been getting all the praise and have been getting all the investment. Any thoughts on MongoDB?
Yeah, you pretty much explained it. They're down since last year. Looking at this 1 year chart, they're trading below their 200-day, and yesterday they were trading below their 50-day as well, and their 20-day. At least the 20-day is declining. The 200 days declining. I can't really tell. The 50-day might be flat, but today it's going to be trading above all of those averages. Looks like yesterday was a pretty high volume sell-off day. Their RSI is below the midpoint, and they'll be above that today. And I'm sure the PPO will also move above the midpoint. They're just barely below the line now.
Mm-hmm.
So they've underperformed the S&P 500 and the technology group, the software group, while the software group is outperforming the S&P 500. Today is going to change a lot of that.
Yep.
It looks like December when they announced they dropped 16%, and then in March they dropped 26%. In June they went up 12%.
Yeah, this stock is a streaky stock. And on charts, when you have a company move so much, like on earnings, I mean, does it kind of break the charts, or can the chart still tell you something or explain something?
Well, it's a little hard to decipher that. They're going to jump up. What'd you say, about 279 or so?
Yeah, let's see here. $278.24. Yeah.
Yeah, they didn't hold that when they announced in December. They did have a bounce about 2 weeks ahead of that. I guess this is their earnings. I'm just guessing by looking at the chart action, but they did have a 3-day rise in the price here. It looks like maybe before the earnings. Yeah, it's a little hard to tell, if they're going to hold that or not.
Yeah. All right. Very good. So we have a request. Looks like we have Mike, the dividend investor guy. Good morning, Mike. And we have Carlos. Good morning, Carlos. Stefan. Great to see you. And then Blocks for Fun. Good morning. He'd like us to look at pins. So is that Pinterest?
Yeah.
Is it? Okay. Let's take a look at Pinterest. So Pinterest is a social media company. I think of it a little bit like Instagram, a lot of pictures involved. I'm not a big Pinterest user. Stock is up 24%. 1 year, it's up 11.5% over the 5-year. Not very good. Only up 5%. It had a nice rally coming out of COVID. All right, but then it's really come down. Historically, when I look at Pinterest, for some reason, they don't make a lot of money and they don't create a lot of cash. But let's see what's going on this time. I haven't looked at Pinterest, geez, in a long time. So market cap's really low. They've been around for a while. It's not like, hey, they're a startup, just started. 24.5 billion, revenues 3.9 billion. Not bad. Maybe 7 times revenue. And PE is 13. Not bad. Looks pretty rational. Looks a little discounted depending on growth. It's a strong buy with an 18% discount according to analysts. They have been growing their top line revenue. That looks good, 17%. Free cash flow of $1,047,000,000. That looks good. Gross margins are good. Okay, and those two things look really good. Okay, I'm not expecting they have any debt. And they don't. They have $2.66 billion cash and very little debt. So this looks really, really good. And 27 analysts cover it. They think it's discounted. Let's look at their forecast to see what kind of revenue growth. See, they're going to just continue to grow their revenue. Yeah, these guys look good. Look really good. Why don't I turn it over to you? You can take a look at the charts, and while you do that, I'll kind of update a valuation.
Okay. So they must have announced earnings on around August the 7th or 8th.
That's
They
right.
did, yeah, they did drop 10% on that day. They've recovered a little bit. They got down as low as about 30, 33 or so, and now they're trading back at 36. The 20-day is decreasing. The 50-day looks like it's increasing. They're trading below those two averages at the moment. That's going to serve as a bit of resistance moving forward. The 200-day is rising, and they're trading above that. Their RSI is right at the midpoint, slightly under. Their PPO is also slightly under. It looks like the two moving averages are coming closer together. Looks like the accumulation started to increase at the end of July. It's been increasing, nowhere near its high. Money flow is positive and has been since the 4th of August. They're right in line with the S&P 500, just underperforming by 1.2%. They're underperforming the communications group by 11%. Network services or internet. Okay, they're in the internet industry group. They are underperforming that by 14%. And that particular industry group is outperforming the S&P 500 by 15%.
Really?
So,
Is Meta in that group?
yeah, let me check.
Yeah. That's a surprise that they're underperforming the S&P. It's a because
Yeah,
Meta's in there and Reddit's in there.
they're in the same group.
Hmm.
Um, let me double check what I said. They're under. They are out. The industry group is outperforming. Did
Okay.
I say underperforming?
Yeah, or maybe I didn't hear
Okay.
it right. Sorry.
Okay. Yeah, they're outperforming the industry group. Their pins is underperforming the industry group.
Got it. Okay.
Yeah,
That
yeah.
makes sense
I
because
expected this one to be outperforming the S&P. So if I said that, I apologize.
no worries. No worries. So, yeah, this one Pinterest, you know, it's whenever I looked at it in the past has been a surprise like, hey, why doesn't their stock do better? Cuz Meta's in there and now Reddit's in there. Reddit's been volatile, but recently it's gone on a tear, went up like 80%. So, it's always been a surprise stock like, huh, the market doesn't like it or it doesn't appreciate it. So, I'm putting this finishing touches on my valuation. Are you good with are you done with the charts?
Yes.
All right, let me get back to mine. So I just finished the valuation based on cash flow. The company produces really good cash. $1,047,000,000 in trailing 12 months. They're growing it real nicely. So I'm going to grow it at 15%. And they are in a industry, no big, imagination needed. It's big and it keeps getting bigger because these US social media companies continue to grow internationally. So their growth is going to be better than other industries. So that's going to be a good thing. On cash flow, this stock is discounted by 52%. And looking at earnings per share, 220 is their earnings per share. It's a good growth company. And their PE ratio that the stock market's paying is really low. So yeah, this is a nicely priced stock. And I just don't understand why the market's not excited about it. It's excited about Reddit. It's excited about Meta. So why isn't it excited about Pinterest? Pinterest is a well-known property. I'm just going to remind myself to add Pinterest to my watch list, but back to the analysis. And I wanted to look at the stock like over the 5 year, right? It had this really, really nice rise and it came down. I remember looking at it and just the fundamentals, it just didn't drive a lot of revenue, cash, profit. So it wasn't very interesting. Meta was very interesting. And glad I bought that one. But now this stock over the 1 year, this is a surprise. Let's compare this to Meta and to Reddit. So you see that Reddit's just killing it, right? Up 272%. Meta is having a really good year, 45%. And Pinterest is falling behind. But it's not about, hey, let's pick the stock that's gone up the most. No, let's pick the one that's discounted the best. Pinterest is a really good opportunity. It has a very good valuation. It's in a very good industry. I think it's different, right? Like it's not Reddit, it's not Facebook. It's a lot of pictures, and I'm sure it presents itself. I never go in here, so geez. All right, I'm not gonna. Anyway, it's a lot of pictures, and I guess it wants me to log in. That I'd be able to just kind of scan it really quick. So it's an interesting stock. Thanks for bringing it up. Blocks for Fun. It's a pretty interesting stock. Justin,
So,
good morning.
Mike asked if they had missed their earnings, and it does look like they had missed the last three.
Yeah, maybe they need to kind of have a better, oftentimes you see companies guide very conservatively, very cautiously for that reason. It's much better to beat than it is to come in short. And you see that a couple years ago, especially, they went from 52% growth in 2021 to 8.7 to 9%. So that didn't look good. But then they started to grow much better in 2024 and have held pretty good growth. So yeah, if they have surprised in the past, maybe they've learned their lessons. And guys, just guide really conservatively. Some of the audience hates it. Some of the stockholders hate it. Like Meta was notorious for it. They would come out with great earnings, like just killed it, and they would pour cold water on it. Just, hey guys, I know it's a good quarter, but next quarter is going to be tough. Let me tell you why. Then they'd next quarter roll up, and they would beat it, and they'd be like, I know we beat the quarter. Next quarter is going to be really, really difficult. And that's because they felt kind of like the backlash if you don't beat your number. So maybe Pinterest has just got to get better at that because their numbers on paper look good. So, and it is somewhat of it's a small valuation, somewhat of a small business. So I like it. I think it's a good one. All right. So that is Pinterest. Let me park that for a second. And Justin, good morning. And Justin wants to look at HLI. HLI. Never seen it, but we can take a look. Good morning, Mohammed. Very good to have you. And Mike, yeah, it could be the case, Mike, that Pinterest misses their earnings, and hopefully they get better at guiding because their numbers look good, as mentioned. All right, so let's take a look at HLI. Houlihan Lokey. Houlihan Lokey is an investment banking company, provides merger and acquisition, capital market, financial restructurings, liability management, financial and valuation advisory services worldwide. The company operates 3 segments: corporate finance, financial restructuring, financial and valuation advisory. All right. So they really have had a good 5-year. 1 year looks good. Market's been performing great. These guys are basically just kind of doing better than the S&P, but they're kind of following the market. If you look at the um, the chart, and I guess its pattern is a little bit like the S&P. They're a $14 billion market cap, 2.48 billion in revenue, PE of 33, forward P of 26, and they're fairly priced according to analysts. The revenues are increasing. Back in 22, 23, the revenues did decrease, probably because the market was pretty bad. And we saw that with like brokerages, like Robinhood revenue went down, Coinbase revenue went down. I know that for a fact because I was a stockholder, so I remember seeing it. And it's just market conditions. If we're in a bull market, Houlihan Lokey does well. They drive good cash flow. These guys are all services based, and they have very good profit margins. Good company. Okay. And I'm not expecting to have any debt. Why would they have debt? Yeah, they have more cash than debt. So it looks good. I can take a look at evaluation. You want to take a look at the charts?
Sure. So it looks like they had a breakout from their November high and then their January high, and then they touched that line about 3 times, including February. Then it underperformed from February all the way through, looks like July 10th or so, and then they broke out about right here. So that looks positive to me. They're trading above upward sloping 20, 50, and 200 day. You can see some days where they traded a lot of volume. They're currently above the RSI midpoint, not into overbought territory. PPO is positive, and we had a crossover 3 days ago to the positive side. Their momentum is better than that of the S&P 500. Their price is a little bit below that of the S&P 500. They're at pretty much a 52-week high on accumulation. Their money flow looks really strong. They've outperformed the S&P 500 by 15%, the financial sector by 6%, the investment services industry group, they're underperforming slightly, while that industry group has outperformed the S&P 500 by 17%. It's looking good to me at the moment.
Yeah, the only concern I have is, it's a company that I have never heard of, and I don't know if other investors understand what they do. I don't quite understand exactly what they do. It's easier if you look at like a Charles Schwab. Oh yeah, I know what they do. Or Robinhood. I know what they do. These guys are more of they're doing things that are hard to understand for me. I don't know if you understand what they do.
I'd have to look at them a little more thoroughly.
Yeah. So I think that might hold the stock back a little bit. The unfamiliarity and their business model is a little different, but the stock has performed really, really well over the 5 year, over the 1 year. So, there's enough investors to make the stock really work. Let me put the
How'd you find this one, Justin? This definitely one I've never heard of.
yeah. All right. Let me put the finishing touches and we'll get back to my screen.
While you're doing that, we can look at the weekly trend for that one. So HLI. Yeah, they've outperformed their long-term averages since November of last year. And over the last 5 years, they have only underperformed those averages from May to November in 2022, which is a tough year for most stocks. So they're definitely showing strength on the weekly chart in the long term. The short term, they had a recent dip, but they're outperforming those averages now. And I like to look at how much time above those averages compared to the percentage of time below those averages. And this looks really good. Same way with the short term averages. We've had some underperformance on those several times, but it looks like in the short term, they're looking very strong at the moment. So all three time frames, excuse me, look very good
So it
in
looks
that
like
chart as well.
Justin answered your question. He bought it 5 years ago, heard it from a friend. Very good. Nicely done, sir. You're up nicely on that stock. I've got the valuation ready to go. Let me get back to my screen. So overall, this stock has performed great. Has very good cash flow for its size. And based on cash, it's still discounted by 35%. And based on earnings per share, it's more fairly priced. It's got a small discount. It's fairly priced. Now the stock has been, moving higher considerably. And but this is one, I mean, you already bought the stock, which is great. I'd probably wait for a strong pullback. I'm I'm in the camp that, our market's a little expensive. I could see a pullback coming or maybe worse, and we see better stock prices. And I would wait for a nice pullback to add shares. Right now, especially if I was sitting on a nice gain and I had a lot of shares, I'd probably just sit tight, hold my shares, and wait for nice pullbacks to add shares. But good
And it
one.
looks like over the last 3 years, they haven't tested the 200 too many times. They did in 2023 at the beginning, and then one time in November. But other than that, they don't get down to the 200 very often. The 50 looks like it tests that quite a bit more frequently. So somewhere between the 190 and yeah, somewhere between the 190 and 176 range would probably be a pretty good pullback.
Yeah. All right. Market has opened. Looking at the heat map, Nvidia's under a little bit of pressure. Nvidia's been going up over the last few days. I've noticed that. It's been going up 1%, a little over 1%, as investors were buying before the earnings. But today it looks like a little bit of selling pressure. Broadcom's also selling off a little bit. The big caps, Apple's up, Microsoft is even. Amazon's up a little bit. Tesla's up. Google's flat. Meta's a little under pressure. Looks like pharmaceutical companies are having a good day. And energy's having a good day. But overall, what is the market doing? We've got the S&P is flat. Dow Jones is up a bit. NASDAQ's down a little bit, probably because of NVIDIA. And the Russell, that's going to take a little time to update. So we'll give it a few minutes. All right. So looks like Saeed's on. How you doing, Saeed? Good to see your name. Hopefully you're having a good day.
I did buy a vertical put on NVIDIA yesterday that I'm going to have to close out today and move that out. I accidentally bought Friday's expiration instead of September's, but
what is a vertical put?
So I'm expecting a little bit of a downside. I think the reward to risk ratio, the risk is higher at this point. So I sold a put at 155 and I bought a put at 185. That limits my loss to about $740 with about a $1,500 reward if NVIDIA happened to hit 176 by Friday. But I didn't mean to choose Friday's expiration, so I'm going to close this out today. I am up 13% on it at the moment, 15% now. So I'll be okay to close it out and move that out 3 weeks.
Nice. All right. So going back to some stocks that announced today, we had talked about Abercrombie and Fitch, which is an apparel company, on the live stream, actually on the member call. This may be 2 months ago, and the fundamentals look pretty decent, and the stock had really been just sold off. This is a company that got caught in, you know, some bad behavior from their CEO, and their CEO's, I believe, being prosecuted in court for some really bad things that the CEO did. And I think that really affected the brand, but the company continued to perform, top line revenue continued to grow and so forth. So it was interesting to see that, okay, the company's doing okay from a business perspective, but they announced their quarter this morning and the growth wasn't great. So the stock is under a little bit of pressure. The fundamentals, see if anything changed on cash flow. Cash flow is okay, a little under its typical quarter. Let me get back to my annual so I can see the trailing 12 months. Yeah, 344. That's good. They have decent margins for being a retailer, 62% margins. These guys are more specialty retail, right? This is fashion that's in, and people will pay up to buy that really cool piece of clothing that they want to have. So they're successful in that space, where if we look at like a Target or a Costco, we're not going to see these margins. Free cash flow margin isn't all that great, but they are profitable. So their free cash flow, I'm going to try to remember this, is 345. All right. And so 9 analysts cover the stock. They believe it's discounted by 30%. And their profits are going to be growing, not tremendously, but growing in the future. Their cash flow for 2026 is $10.27. All right. And I do have a valuation for these guys. So previously, and their cash flow did dip a little bit. They're discounted. So they offer a discount. 1027 stayed the same, keeping a PE low. But I think the market's probably still trying to digest and process, the bad behavior of that CEO. Is this a stock that is investable, or does it just have too much bad press and investors are staying away? So that's Abercrombie and Fitch. And I did notice on Netflix, I haven't looked at the movie, but there's a movie out there on the company, but I haven't watched it. So that is Abercrombie and Fitch. Do you want to show the charts on this one?
Yeah, it looks like they bottomed out around when all the other stocks bottomed out this year. I don't know what this was about, if it was related to earnings or not. That black filled candle would indicate that even though they jumped up big, you could expect the price to decrease because the buyers came in and drove the price to the highs of the day.
Uh-huh.
And then you basically had sellers throughout the rest of the day. So then if that selling pressure continues, you can expect it not to hold that price. And that's exactly what happened here. So they're trading below their 200, their 20-day. They are above their 50-day. They did trade below it earlier this morning at the open. The RSI is about right at the midpoint. The PPO is positive. The accumulation and distribution is almost at a 52-week low. But the money flow is positive right now. Looks like they had a lot of distribution back from October of last year until January of this year. They bumped up above just a little bit, and then they had a lot of distribution all the way through March. So that was a long stretch of distribution, although the price seemed to hold until early January. But this was giving some signs that that was going to happen. Okay, then we look at it's underperforming the S&P 500, underperforming discretionary by 55%, underperforming apparel retailers industry group by 47, and that group is underperforming the S&P 500 by 6%. I think they just signed a contract with the NFL as well. I don't know if you mentioned that or not.
Sorry, I missed that last comment. I had to go grab my phone.
Oh, okay. I think they just signed a contract with the NFL.
Oh, okay. That's interesting. Speaking of the NFL, I watched was it on Netflix? The Cowboys documentary with Jerry Jones. It was called The Gambler and His Cowboys. I really enjoyed it. It's always neat to see a story of a entrepreneur, um, and kind of follow the journey of the risks he took and how he parlayed that into his current ownership of the team. He was an oil an oil man who hit big. Then he took that wealth and he bought the Cowboys when they were really, really sold off, and built what they are today. Now the Cowboys are worth 11 billion. So that guy, he did okay for himself.
Yes, he did.
Yeah.
Taking a look at those options for NVIDIA, let me explain that a little more thoroughly. So basically, I'm risking 738 for a potential reward of 2,200. if it closes below 177 NVIDIA by Friday. I don't want Friday. I'm gonna have to get rid of this option and move into another one. But I was up 15%, 5 minutes ago. It's up to 20% right now.
Wow.
I'm gonna make a profit on this mistake, and I'll just move it out a little bit.
So I think it was Carlos asked me on the stream last night. He said, did I think Nvidia was going to trade up or down on the earnings announcement? And I had to pick one side or the other. And my gut told me that they were going to sell off, and we'll see what happens. What's your
Yeah,
gut tell you?
stocks this year are being rewarded if they exceed their earnings by about 1.4% average price movement. If they meet or miss, they're being punished by at least 5.4% on average.
Mm-hmm.
That's working against Nvidia, despite what numbers they play. The market in general this year is punishing for not beating earnings in a big way or providing guidance.
Yeah.
So if we look at Nvidia, I mean, they've had a 90, let's see here. Yeah, 105% run
Nice.
since the bottom in April. They had a little sell off last week, and going into the earnings this week, they've been up 2 days, 3 days, Friday, Monday, Tuesday. So I think they have a lot playing against them. I'm not going to rule them out, but I just wanted a little bit of protection for the 100 shares that I do have. I didn't, I think they're going down, but I didn't want to lose that much money, so I could buy a little bit of insurance and cut my losses in half, basically, by having this put in place.
Interesting. So let me talk about Nvidia a little bit. Before I do that, got to get back to the Cowboys. So Mike said that Jerry Jones has destroyed the Cowboys program, and I guess you could make the argument, but there's a giant but in there. But he won 3 Super Bowls, and he took a team that was dead last. Just they couldn't. They would win one game in a season, and I think in 3 years they were a Super Bowl champion. So, however he did it, that was a really big success. In the last, 20 some odd year, close to 30 years. Yeah, 29 years. They haven't been in the Super Bowl. They haven't won a Super Bowl, but he won 3 Super Bowls. There's a lot of franchises that are like, they haven't won a Super Bowl. They win one and they're ecstatic, like the Seahawks, even the Rams, in LA, they just won. They were ecstatic. And the Cowboys, Jerry Jones winning 3, that's a pretty good metric. I think lately the Cowboys are not competitive. I don't expect they're going to do well this season. I think they're going to have a big problem with those Eagles. The Eagles look pretty darn strong, but we'll see. We'll see. We'll talk football for the next 4 or 5 months, and it'll be fun. Back to Nvidia. Nvidia is an incredible stock, just absolutely incredible. Now, one of the things that, I heard this, so I'm kind of copycatting the comment is all the news, all the positive, incredible news is known. Like, so is there a new twist that is positive to the Nvidia story? There are few twists left. There's few things to cover. It's like, hey, data centers are growing. Yeah, we've been talking about that for 2 years. So there's very little room for positive news. Like the market mind is full of all that positive news. But there's room for negative news. If there's any type of like, oh, but this or but that, or there's a little bit of caution here, that could cause some sellers in the stock because they're sitting on good gains. It's a $4.39 trillion valuation. So I don't know that it would sell off a whole lot. Maybe just come down 2, 3, 4% on earnings, because it's just really hard to get more air in the balloon. It's already really full and it has a PSI of 500. Well, it's really hard to blow into that balloon. And so you can't blow any more positive news into it. That's kind of a big theme or a theme I would put out there. And I did hear it from somebody else, and I agree with it. I think the stock is priced a little too high. I think the stock's priced, I think about 35% too high. And when I work with NVIDIA, I try to be realistic and optimistic at the same time, but I still come up with a valuation that's 30%, 36% lower than its current stock price. But we'll see. Based on earnings per share, it's fairly priced. But this isn't the number that really drives most of my valuation. This is a number based on cash flow. So the big show will be later today. We will see what their earnings were all about. Then after NVIDIA, the market's going to have a lot of time on its hands. It's not going to have any other big news. Can you think of any other big news between now and when earnings start again?
Anything related to the Fed is going to continue to play. The PCE, it comes out this Friday. GDP second estimate, I think, comes out tomorrow morning. And with the Fed chair stating that the labor market is now as important as inflation was, so they're kind of on equal footing. I think the weekly unemployment claims and continuing claims is going to continue to be important over the next few weeks. So I think we have at least one or two more labor reports, job reports, and we have at least one or two more inflation reports. I think all of those could be market moving, with the market focused on the Fed at the moment.
Yeah. Yep. And the rate cut, when is it? They're going to meet in September, right? And I think the market's expecting a rate cut.
Yeah, probably a quarter point. Some people are talking 50 basis points. I don't believe that. I think it's going to be 25. So that announcement will be on the 17th of September. And the next meeting is the 28th and 29th, and then the 9th and the 10th of December.
So if they move 25 basis points, it'll be a little bit of, hey, that's fully expected. Not a big move in the market. But if they cut by 50 basis points, the market would go up, is my expectation.
It depends. If the market is fearful that the Fed knows something that they don't, it could actually fall on a 50% or 50 basis point cut. If it creates any kind of fear that we have GDP or something that is going, if our economic growth goes down, the job market gets worse, we look like we're moving into a recession, that could cause fear that would cause the market to go down. So it could go either way, but no guarantees one way or the other based on a larger cut.
Nope, no guarantees. It's I just sense that NVIDIA is going to be the last big earnings. Like after this one, there'll be earnings, but they just won't be this big, and we're going to have a lull in business news, um, and that lull can lead to a pretty solid sell off, which would be good, frankly. I mean, we've got some. I mean, look at Nvidia in itself. It's an expensive stock. It's done really well. Congratulations to Nvidia stockholders. It's just an expensive stock, and you can pull up a good number of these. We were looking at some stocks in Europe on the member call yesterday morning, and some of those stocks for aerospace and defense are up 200-300%. And you look at utility stocks, they're up 200-300%. And it's like, geez, man, it's like those prices are just too exuberant. And we need we need a little bit of rational thinking out there. But we'll see. We'll see if the seasonal sell off is going to happen or if we're just going to keep moving higher. I think I'm 75% expecting we're going to have some sell off in September. It'll be 5 to 10% and kind of just bring down some prices, which will be good news. Did you have something to share on this screen?
I was just looking at the sectors at the moment. Everything's in the green with the exception of technology.
Mm-hmm.
And look at the top three. Those are all defensive in nature.
Yeah.
So this is kind of playing out like early last week where it was moving in defensive stance.
Yeah. That's good. Yeah, I mean, it's if you look at I think real estate is looking better and better. Energy is a wild card because we need the commodity price to go up in order for that space to really do well. So that one's kind of a hard one. But real estate, with the expectation of lower rates, real estate should do well. Healthcare has been beaten down so bad, it probably will do well because it's so discounted. So even staples are looking pretty decent. I bought
Yeah.
some Kroger stock this week because it was beaten down. It was like, hey, you're going to give me that price on it? I'll buy some more. I already own a bunch of Kroger, and it's been a good stock.
So Google, Amazon, and Apple are up today. Tesla, Microsoft, Meta, Netflix, and Nvidia are down.
What's Pinterest doing?
Let me go back to the.
So one of the things that so finish your thought and then I'll come back to what I was going to say.
Looks like they're about where they closed yesterday, 36. They're down 0.07%.
So Justin wanted a clarification on real estate. Did I mean home builders or REITs? I would say both. Home builders would be more of a speculation, like, hey, I think so this home builder is really priced well. I want to own it, and I would define my exit strategy. Like, hey, if I get to a 40% appreciation, boom, get out. REITs is more of a longer term play, and just and especially some REITs where that particular asset class, like commercial, has just really been beaten down. Maybe there's some commercial that is coming back, and that's office space and so forth. Not necessarily the commercial where it's for apartment buildings. I think those have held their value quite well for the past couple of years. I think there's some opportunity there. Real estate is not going to be as great as technology, communication services, or even financials. It's not one where we're going to, look back, 2 years from now and go, wow, that went up 300%. No, it's going to be, hey, great. You're up 50%. You were paid a dividend in that time is more of kind of like the best case scenario that I could imagine.
So Green Brick Partners is a home builder, and they're up from 52 to about 69, and most of this is on the talk about rate decreases because that will help the home builders. I think this is a builder in Texas,
Yeah.
one that I've owned in the past. I sold out when it
I
went through this. I
I
sold
think,
out.
who's that big investor? David Einhorn is I think he's, an investor as well. Yeah, David Einhorn. He's an investor. So you and David Einhorn are making that stock go up, huh?
I don't actually own it at the moment. I should have bought it back
I
in April, but
Einhorn owns $595 million of that stock,
yeah, I'm
and
a
it's
little
not a big
shy
cap.
of that,
Yeah,
just so
but
you know.
Einhorn is really good. He's a really good investor. He's in home builder. The other guy, you may have heard of this guy, Warren Buffett. He went into home building this past quarter. You maybe noticed that.
Yes, I noticed.
So he bought into a couple of them. I think one of them. Who? Let me look up his portfolio real quick. Yeah, he and Buffett, putting my my imagination to work here. He bought Lennar and he bought into DR Horton. And again, putting my imagination to work, the Oracle from Omaha probably saw that interest rates are going to come down and that's going to be a positive for home builders. And his buying into home building, I think, is a bullish call on home builders.
Yeah, so if he was buying between April and the end of June, he was getting in some pretty good prices here,
Yeah.
somewhere around the 108 price. So they're up to 133 as of
Hmm.
right now. Um,
Yeah.
DR Horton,
I held Lennar for some time. I did well with it. Um, it I did well with it, and then I got out. It kept going up, so it was a successful run, but it could have been better. But then it came down more recently, but now it's going up again. I'm going to write myself a note to take a look at the home builders. If you buy them at the right time, it's a good idea. All right, cool. So let's take a look at the chat, see what's going on. It looks like Cream Biggins. Good morning. So Oscar has been going up nicely. Let's take a look. And then one last comment on the Cowboys. My Cowboys are my team. Jones is a virus. Awesome. Great. So, all right. So, Oscar Health. What's going on today? Wow. Nice. Over the 1 month, it's up 22.5. And what's the beta on this thing? 1.86. So, if you want a little excitement in your life, I have the right stock for you. Here you go. Enough of that. My stock never moves. This stock moves, and it's really, if you believe in what they're doing, it's an opportunity. If you don't believe in what they're doing, probably not the right stock. I happen to think they're on the right track, trying to sell health insurance to individuals and small businesses. I think it's a big addressable market, and they're growing really well. They have very good revenue growth. Their valuation supports this stock price, and it actually shows a nice discount. And this is a streaky stock. It gets on these streaks, and boy, look out. I mean, look at these days. I think here they announced earnings, and the stock went from $14 a share to 21. Back here, it went from 13 a share up to 17. But it also has moments when it just, collapses. So Oscar Health is having a good 30-day run. It seems like, healthcare has got this giant magnet for bad news. And hopefully no big negative stories find this space anymore and healthcare can just be allowed to kind of go up. We'll see, but it has been going up nicely. That's a very nice move. I had been buying shares on, the strong pullback we had a couple months ago. So I was able to load up some more shares, kind of give a more capital there. I've also loaded up on United Healthcare and a couple of others, so I could ride up the healthcare um, upward trend. Any thoughts on Oscar?
I was looking at the chart and I added Bollinger Bands to this one just real quick to see how it trades against this Bollinger Bands. These are 2 standard deviations away from the 20-day moving average. So you can see that it may run along that Bollinger Band, but it'll eventually pull back to the 20-day. We're in that position right now. So yes, it's been on a good run, but it won't do that for long against that Bollinger Band. Every time I see it, it finally breaks and pulls away from that. So you'll have to watch that if you're riding this and you're not a long-term holder and just ride it out. But if you're trading it, you'll want to keep an eye on that.
Yeah, we'll see where it goes because it doesn't have like looking at like the 5-year chart. It doesn't have an upward trajectory. It's like it's all over the place.
Now let me take a look at it. Yeah, that's quite a ride. Their long-term averages over the 5-year weekly span is just barely above positive, so it's just outperforming its longer-term averages. The medium term and shorter term look a little better, but it doesn't look like it can hold those very long before it comes back down.
Interesting. All right. So let's move to the next kind of string of comments. Little J, good to see you. And we have been talking about med device. I know we talked about med device last night. And we also looked at intuitive surgical maybe last week or the week prior. And this is an ETF that Little J is referring to. And it's up 6.44. Does it pay a dividend? It pays a small dividend 1 year. So this is an ETF on med device. And I'll put my bias out there. I'd like pharmaceutical more than med device. I think that economically it has advantages to be a pharmaceutical company versus a med device. And if we ever analyze the stock, like we analyzed Stryker last night, I think a member wanted to look at that. Stryker looked okay. It looked good. It looks like a good opportunity. But this is a ETF on med device. And Little J also had some comments on Daryl. Can I see TA for Fortinet? Thought interesting news. Can you read this message and decipher what he's asking for there?
Is this a cyber company?
Yeah.
Okay. And they must have reported, I
They did.
presume. Okay. So they're down 22%. They do seem to be recovering from that a little bit.
Yeah.
Lot
I
of volume.
analyzed the stock when that happened and
Okay.
took a look at the situation and determined that it's a pretty good risk reward. So I started buying into Fortinet at that time, and I think it's going to go back to where it was before. But keep going.
I I think you're probably right. I don't see cyber spend going anywhere. I was listening to a podcast yesterday and they were talking about all of these software companies, and you kind of have to differentiate them from Where can the spend continue versus where it might slow down? So if we have an employment, you have less people, for instance, you don't necessarily have to buy as much many seats or what have you for like HR related software. But regardless of how many employees, you are going to have to spend something on cyber.
Yeah.
That just we live in a dangerous world. So you
We
kind of have to differentiate these companies. Go ahead.
we do. The one, theory that I have on cyber, I love cyber. I've owned successfully Zscaler. I've owned a good number of them. But it's not one of those where I expect it's going to be the next Microsoft. And here's why is if you study the history of cyber, the best cybersecurity company 20 years ago, they don't need it's McAfee. And guess what? They're like completely gone. And if you go 10 years ago, it was so and so. Where are they today? They're not relevant anymore. The bad actors are not trying to break into the bank the same way they were trying to break in 20 years ago. They weren't trying to break in the way that they were breaking in 10 years ago. They continue to evolve how they're trying to do intrusion and steal data and so forth. So let's take CrowdStrike for a moment. The way they do cyber is working. And until the bad actors figure out, okay, let's abandon that whole area and try to intrude a different way. Well, CrowdStrike doesn't touch that. Another company is going to cover that. So when that company covers that new vulnerability, companies are like, okay, CrowdStrike, we don't use you as much anymore because we need to use this other company because that's what state of the art is. And they move to that new company. That happens. That evolution happens. And I've just observed it. So I'm not like a person that believes CrowdStrike's going to be on top or near the top for the next 10 years. I think at some point, a new company, and you see these new companies come out and they come out with better, and companies buy that product.
So they did come out of the oversold condition. They're
Mm-hmm.
back above the 30 line, so they're sitting at 35. Looks like they're having a bullish crossover, but in negative territory. So people are less bearish. Momentum is better than the S&P at the moment. Pricing is has less relative strength. Look at the accumulation. It's at a 52-week high. Even in a sell-off, there was some buyers came in. So if you're asking me if this is a buy the dip, buy it with some caution and manage it using risk management. And I think you're going to be in pretty good shape at the moment.
Tell
They
me,
are. Go
tell
ahead.
me more about risk management. What does risk management mean to you?
Don't lose money.
Thank you, sir.
So, so if you're going to buy it here, don't. If it happens to take another drop, just limit your losses.
So you,
If your thesis is wrong, have a stop loss set. Whether you do that in your trading tool or whether you do it in a chart or you have something in mind, have your exit point in mind.
okay.
Um, I mean, if you were buying up here, you're sitting on a 22% loss at the
Hmm.
moment.
All right.
So
So let me interrupt the broadcast for a very hot tip. Mike, the dividend invest guy. Did I jump all over Rexar? How many thousands of dollars did I miss out on here? Because I didn't. Rexford Industries Realty up 5%. And let me share my screen. So the 1 month up 12%. No, I did we cover this stock? Let's see here. Rexford Industrial creates value by investing in operating relevant industrial properties through infill Southern California. This looks really interesting. I'd like to look at it. Yeah, I like this. I like this idea. So I'm in Southern California. I'm a real estate investor in Southern California. I've done well in real estate in Southern California. So this has I'm going to put a little star next to this one. I'm going to put a little star reminiscent of the star on the Cowboys helmet for you, Mike. And I'm going to research that on my own time. Thanks for bringing that up. Let's go back to Fortinet, and Daryl's got us on the Fortinet trail. And so I looked at cybersecurity stocks, and I think I looked at about 8 of them and kind of did a head-to-head comparison. And Fortinet came out as the best opportunity for me, like best pricing, best discounts, and so forth. And I decided to start buying into it. And so far, so good. It's doing good. It's had a really tough year where it's really sold off. And I think earlier conversation piece we had, which was, managing expectations in the market. It's really important that you manage those expectations properly. And the way the market behaved around their earnings, I was like, the market expected better. The company came in with their earnings, but the earnings were okay. I thought, structurally, the numbers look pretty good. So I thought the market overreacted, and maybe the company can do better at setting the right expectations in the investing community and maybe managing those expectations better. This is not the biggest company in the world, so maybe they're not good at it. But I think this stock is a good one. It continues to grow its revenue really well. It produces good cash and good profits, very good margins, big, fat, juicy margins. Great. And overall, compared to the other cybersecurity stocks, what's great about stocks is we can shop around. Earlier in the stream, we looked at Pinterest. Pinterest provides a pretty good proposition to an investor. Hey, I'm discounted and I'm growing and I'm a social media company. And you could compare it against Meta. You compare it against Reddit. Reddit, I think, is priced a little too expensive right now. It's really done great. But with cybersecurity, you could say, okay, well, I could buy Fortinet at a 36% discount. Right now, they're a little down on their luck. Or I could buy, this is one we looked at last night. Lesser known, it's discounted, but it's down on, considerably because it's growth. Zscaler's had this is probably the best performer of the bunch. Zscaler over the last 12 months, it's up 50% or so. I bought into Zscaler in 24, did well with it, sold it. CrowdStrike priced 42% too high. CrowdStrike's done well, but it's not a perfect stock. And then the last one is Palo Alto. And where I'm going is you can see, hey, I want to be in cyber. Which one's the best investment, right? And Palo Alto is fairly priced. If you want to own Palo Alto, it's one of the nice, recognized big names. Well, you got that choice. But I thought Fortinet was the best opportunity for me. So I bought into Fortinet. And that's how I got there. So thanks for asking, Little J. You set us on an interesting course. And oh, you jumped over my RX comment. Maybe. Oh, sorry. So this was a question for you. Daryl, do you hold Rexar?
No.
Okay. Do you have an opinion on the Dallas Cowboys?
I do.
No. All right.
But it just shows how old I am because I was more when the coach with the Derby was coaching them. So that was 40 years ago.
Nice. You going back to Staubach and Tom Landry?
Exactly.
Yeah. One of the classiest guys in sports, Tom Landry.
He was definitely classy.
Speaking of classy, I watched a documentary on Neil Armstrong, the astronaut.
Yeah.
What an interesting guy. Came from Ohio, was a man of few words, but super intelligent, obviously. And really enjoyed that documentary. So, Sebastian, how you doing this morning? I am having a good day. It is looks like 10:30 Eastern. Are the markets treating us okay? Before I answer that question fully, let me look. Yeah, I'm doing okay. um, Stocks are a little mixed. It's going to be really interesting to see Nvidia announce. Nvidia's making its way back to even. Google is doing well today.
Yeah,
Meta's
I sold that put earlier. So
you did.
yeah.
All right. You got to start your day trading academy, Daryl.
Mm.
That was a good move. Good stuff. So we're going to do a live stream on Nvidia at 4 p.m. Eastern, and we will go through the earnings. We'll cover it closely. I'm literally going to read it out loud, and we'll analyze what we're seeing. We'll see the market's reaction. I'll update my valuation. Daryl will take a look at the charts. It should be interesting, and would really love to see everybody join and ask questions about it. Some last comments, and then we'll kind of close the live stream out. Dave doing nicely today. Dave has been having some good days. Dave is like a new generation financial technology company. I like what they're doing. It reminds me, and it had a nice sell off, but then after, I like the chart that Google gives me. So it had a nice couple weeks up 16%. But I really like the way Dave is providing financial services. Check out their website, and maybe you'll see what I'm seeing, which is this is a way that I think, especially the younger consumer, is accustomed to doing business now. It's not a bank gives you these financial services and you have to go through that process and that experience. Nope. Dave really changes the experience. I like that a lot. And they're growing really fast and they have a very good valuation. So it's still a small cap at 2.86 billion. I bought some shares. I bought a nice starter pack of shares. I'm not betting the farm just yet, but I'm glad that I bought those shares. So far, it's so good. But I'm going to keep adding capital and feeding capital into Dave because these guys could be like $100 billion market cap company in 5-10 years. So I want to be a part of it. So thanks for asking, Sebastian. I think it is doing well and it's an exciting stock. All right. So little J looks like what's that one stock you guys wish you had bought, but you didn't? Mine would have to be Nvidia. I think I overanalyzed it and talked myself out of it. How about you, Daryl?
Well, one thing that I'll say from I haven't known you very long, but one of the things that I sense from you is you try to keep emotions out of your investment decisions. And I've been told that pretty much my entire adult life that when the world seems like it's falling apart, people want to come to me to talk to because I don't get him. I'm not a very emotional person. I'm more logical. So I'm not patting myself on the back. It's just people detect that in my personality. So I don't beat myself up over stocks that I've missed. And I don't think you really do either, though you may have, missed that one. You were into other ones.
Mhm.
So you take advantage of the opportunities. So I don't try to spend any mental capital on, if you want to call it a mistake or something that I miss. I just try not to spend any capital.
That's a good answer.
So
The one thing I would say is, every investment, every act or non-act is, you can learn. And,
exactly.
you know, I've had some stocks do great, and what can I learn from that? Where could I find, like, one of the veins of value that I'm trying to follow is, I've done really well with Meta. I've done well with Reddit so far. So
Exactly.
an investor brings up Pinterest and I'm like, "Hey, I found a cavity of value where in this industry you have Meta, Reddit. I get this industry." So now Pinterest is a stock that's being analyzed. So my learning on Meta, Reddit, is going to serve me with Pinterest. So, and some of these stocks that I misunderstood, like I mentioned, I was smart enough to buy Broadcom, and then I sold it a little early. Okay, but I guess I was wise enough to buy it in the first place. And so that, another one that I mentioned, Netflix. I bought it at the right time, sold it a little early, but I like Daryl's answer a lot, which is, hey, you know what? Investing is hard. And if you're trying to, you'll never get it perfect.
Yeah, and
uh,
just beating yourself up about it isn't going to do any good.
you
Just
might be
better.
perfect for 5 seconds and then you're back to reality.
Yeah, exactly.
All right. So good comments, guys. And thanks for tuning in today. And let's see here. Cool.
Yeah, I think that was related to me.
A Lab's a good one. I agree. A Lab. What's A Lab doing? So A Lab was up quite a bit yesterday. What's it doing today? It's down a little bit. It tends to kind of follow Nvidia, and it's you know, this one here is performing great intra year, 225% from the low. It just presented such a good opportunity. Look at that chart. Whew. Market was telling us investors bought this one, and then market sold it off big time. Came a great opportunity, and I jumped in. I've been selling off some of my shares to just take some profits and lower my exposure. I'm almost done with that selling strategy. I was selling 1/3 of my shares, and then we'll see what happens after that. But it's a really, really cool company. All right. So, and I think Astera right now is priced too high, just to show that. It's just gone up so darn fast. It's priced 32% too high. I'm not selling all the shares, I'm just selling some of them. So, Astera Labs, good one. Hey, Shadow Guy. Hopefully you're doing well. Little J, thanks for bringing all those good questions. Blocks were fun. Good seeing you. And then Mike, really enjoyed your comments today. And Sebastian, thanks for joining. Let's see if Dave keeps going up. I think we covered Justin. Thanks for joining. Keep an eye on those home builders and those REITs. And Kareem Biggins, good to see you. Saeed, great to see you. So the tariffs, do you think tariffs are going to be disruptive in the future, or do you think they're kind of a story that's been kind of processed?
I think for the most part, it's processed. I mean, April was our big hit. People were panicking because we haven't really done a whole lot of tariffs for 100 years. We did in this president's first term on a smaller scale basis. He went much bigger this time, and I think it frightened the market a little bit. And as much as I enjoy economics and value economists' opinions, they tend to put a little too much emotion in it, mix too much political stuff into it, and
Yeah.
I think they overreacted. They caused the market to overreact.
Yeah.
So
Okay.
I think we're settling out of that news at the moment. I think there are other things that have taken higher priority at this point.
Yeah, I agree. Carlos, good to see you. Yeah, I agree that Nvidia's margin of error is low, but it's an incredible stock. And Justin, good to see you. Mohammed, good to see you. And Stefan, great to see you. New member, great to see you. Thanks for tuning in on the member call, by the way. It's great to see you there. And then we have a new member that joined last night. Thanks for joining Cartel Raider. So that's it, folks. That is going to be the morning stream. If you'd like to see the NVIDIA earnings live, tune in at 4 p.m. Eastern. Daryl and I will be covering that.
Yeah, they do report. Let me pull up the time. They're at 20 minutes after the hour.
Perfect.
CrowdStrike is 5 minutes after the hour. Snowflake's 5 after the hour. HPQ is at 15 after. So just so everyone knows about what time they'll report, NVIDIA's 20 minutes after.
Perfect. Look forward to it. Last one was huge.
Yep, I look forward to it as well.
Yeah. Well, Daryl, have a terrific day. Thanks
You
so
do
much.
too, bud.
And I'll talk to you a little later.
All right. Thanks, everyone. Appreciate it.